sort of a overview of the technical analysis domain, just to make you familiar with the chart patterns. And today, we look at what you receive daily from the Capital Trust Research and how to interpret what is contained in them. And to do that, we have to understand what these charts are about and what these indicators that are highlighted in these charts. And to do that, we have to look at some things that we are going to preliminary view of what we send. Not a preliminary, that's an exhaustive view of what we send. And that is the types of charts and the indicators that are used on those charts. Right. Let's look at some of the charts that we see. Daily, right? Now, this is a bit cluttered, but nevertheless, to reduce the number of slides, I have put several indicators on it. This is the Colombo Stock Exchange ASI index chart, updated up to about 3 or 4 days ago. And on that, we have put a plot of several indicators. One, first and the foremost, we have the Fibonacci retracement levels. These blue lines are the Fibonacci retracement levels. And I gave you an introduction as to who Fibonacci was and what was the Fibonacci series and what is the relevance of that. You can go back to the YouTube and see the previous video, and which is on the YouTube, and you will see that Fibonacci numbers 0, 1, 1, 2, 3, 5, 8, and so on are the relevant and numbers, and it boils down to a ratio. As we go down the line to 0.618 of E and 1.618, that is any number divided by its by the number that follows it on the series will give you 0.618, and any number divided by the number preceding it comes close to 1.618. So these numbers or these ratios are used for constructing these Fibonacci numbers. Though 150 are not Fibonacci numbers, we just use it that 50 is halfway through and 100 is complete retracement. We start this number by the highest point reached here in the recent past. That was not very far distant past. ASI reached somewhere there, and and then it came down quite a bit, down to a bottom here, right? And then started retracing back. So these retracements are followed through Fibonacci numbers, and hopefully it will come back up to this 100% retracement level and move up, right? Though some people say it will be overpriced, it will not be. The ASI is still underpriced, grossly underpriced. when you consider the earnings potential of companies traded therein and the potential for growth in the country, COVID or no COVID, companies are growing, businesses are growing, people are eating, people are consuming things, country is expanding. And so you see that population is growing. So therefore, the economy will expand whether you like it or not, or which part belongs to, I mean, to which part you belongs to. You have to admit that as a fact that the country is growing. Population is growing. Nobody has stopped that, right? And with that happening, Sri Lanka will be a star in the East, and as such, it has potential to go well above this high which it reached, just nudging on 9,000 and reach higher levels, which is long overdue, right? Having said that, right, you might think I am madly optimistic, but that is the reality. But let's look at a second indicator that we indicate on our charts, which is the on-balance volume. On-balance volume is a measure which I will explain in detail as we go on explaining. Is an indication of eagerness of people to buy, right? And if you look at this indicator, how you interpret it, you don't have to know a lot of maths to interpret it. You can do that by shift this to this side, and you see that when the indicator goes up vertically, it is showing extreme bullishness. So the market is extremely bullish. That is 4 days ago, and it was extremely bullish. And that bullishness has not waned away. And when this goes flat, if it goes like this, market is neutral, neither bullish, right, nor bearish. If it turns down, it's bearish. So this is an indicator whose value is of lesser relevance than its direction. It's the direction we look at. Some people start buying when it goes to about 45 degrees and start adding to their buying portfolio till it reaches the vertical line and go on buying as long as it remains vertical, right? On balance, some people in certain countries trade only on the OBV. It is so reliable. Mind you, these are not any calculations published by companies. It's not based on any calculations or any figures put out by the accounts departments who have a vested interest in showing that they are rosier than they look. But these are the prices, these are the news and facts revealed by the prices. Right, so watch for this one to turn down to sell. As long as it's up, you can go on buying. This, of course, mind you, this is the ASI index. And in the case of a share, individual share, you can still look at the OB. Those who are too lazy to look at anything else, look at the OB. Many people do so, right? Say, if it goes somewhere like this, still buy. See? You won't go wrong, right? If you are going to take a long-term position, you can buy. Here, even a short-term position is valid. You will make money. Any questions you have, you can send it through to Prashani. She will direct who on the to the channel, and they will present it to me. Right? Okay. Then we have another indicator on this, the good old RSI. Lot of misconceptions about it. When I came back from New Zealand, I asked, do you do technical analysis from some of the brokers? They say, yes, we look at the RSI. I said, what do you look at the RSI for, and what do you see in that? They say, when the RSI is high, we sell. When the RSI is low, we buy. You know, if the world was so simple, every Dick, Tom, and Harry on the street will be a very successful trader. Buy when the RSI is close to 20 and sell when the RSI is at 80, right? That's very oversimplified word. RSI, when you see later in the calculation, that RSI is the measure of strength of a share. So when RSI is 80 or 90, it doesn't mean that it's overbought. There is another indicator showing overboughtness and oversoldness. RSI shows the individual strength of a particular share. So RSI, say for instance, I don't want to name the shares, but those shares, you see, you always have a very high RSI, naturally, because people see that they are very strong. They will have very great future. So they keep on buying it. And so RSI is about 80. And you don't go and sell because the RSI is 80, right? That's a very naive thing to do. And that's a thing that, you do the wrong thing so many times, that wrong thing becomes a reality, right? Everybody sells when the RSI reaches 80, then 80 becomes the ceiling-like thing. But RSI doesn't have that thing, that quality of showing when the market is overbought or oversold. It's the strength of the individual share. If the RSI is high, that shows it's a strong share. I will prove that when we look at the calculation. Then we have a very useful indicator for those who are lazy to look at charts and learn all the intricacies of technical analysis. We have these parabolic dots, parabolic stop and reverse dots. When the dot is under the price candlestick or bar or whatever that people use to dot the prices, open, high, low, close. If they are below, don't ask questions, go and buy it. Right? Don't say that, somebody told that this market is very precarious, is about to fall. That's all rubbish. Because as long as the parabolic stop and reverse is showing here, dots down, buy it. Right? Get into the market. Because this is the market index. I'm saying get into the market. If it's a stock, get into the stock. And when the dots go there, get out of the market. Right? We can't short sell here in Sri Lankan markets. If it's in some other market, you can short sell at points like this. Imagine a fellow short selling, that is borrowing from a vendor, a brokerage, and selling at this point and buying it back here. He will overnight become a billionaire, right? When the market falls down to the bottom and starts going up, he has already become a billionaire, right? So you see that there are very simple ways of doing things. You split hairs over the thousands of numbers and figures on annual reports or whatever it is, or you look at these dots and then any fool can do that. Your small primary school kid can do it. Look, when the parabolic dots appear on top, sell. Parabolic dots appear below, go on buying. As long as you can buy, go on buying. Till the dot reverse goes to the top. Now, what is the warning you receive that the dot is going to the top? That you get from another indicator, which we'll see presently, right? So those are the 4 things that are shown on this first chart. You can show all the things on this chart, but then that clutter it. We'll have other 2 indicators, quite important. Somebody is asking a question. Is there a relationship between RSI, OBV, and other indicators? Here, that's what somebody is asking. Is there a relationship between RSI? That is what I was saying. RSI gives you the strength of the prices maintained in the market. If it is strong, RSI is high. If it is weak, RSI is low. On balance volume shows how the market gained on up days, the days the share was going up, and how the share was performing on days that the market was going down. So those are 2 different things, but both are very useful indications. Right, coming back to this new indicator we are going to consider, right? We still have the parabolic stop and reverse. I didn't remove it. I could have jolly well removed it, but that gives you then the indication of the current trend, the present trend. So because of that, I kept it there to show that it's an uptrend. It's been recommended by PSAR to maintain the continuity. Mind you, this is the ASI chart. And for individual stock also, you can do the same thing. I would recommend the analyst to do this type of sort of chart every day for every stock you analyze, these 3 charts, because it gives you all the information that you can give to the clients, right? Don't write those small ribbon-like candlestick charts. They have them a good full-blooded candlestick chart, and on that you plot the indicator that you want to plot. Here we have what is known as the MACD, moving average convergence and divergence. Now, moving average convergence and divergence means there is a long-term moving average, which is usually the 200 period. That means 200 candles long, right? Moving average. I will come to what is a moving average later, right? That 200 period moving average shows the long-term trend. Generally, they say whatever the MACD indicates, unless this is turned up, see, edges up like this here, somewhere here, don't aggressively buy. When it's edging up like this, go on buying, right? Make a note of it if you have not been told already, right? This moving average, it's not only used as a cutting line for the MACD line. This is the short period moving average, which we call the MACD line, and when it generally the usual advice is buy it when it cuts, like here. Now say it cuts up here, right? You never go wrong buying at this point and say cozily selling at this point, right? You would have made billions if you had invested sufficient amount of money. Right? Some racket going on the road. Right, okay. And so that, I hope no questions on it, because you all seem to understand it perfectly. So I'm not receiving any questions. If you do have, don't postpone asking the question. So while we are on the chart, you better ask it, right? Mind you, if you have any problems, the research analysts are also available full time for you to answer the queries, because we have a real-time feed, unlike others who depend on freebie charting techniques like Investopedia. We are using real-time metastock, and therefore we have real-time updates as the market goes on. Maybe there was a delay of about say few minutes or hours, but nevertheless it's getting updated while the market goes on. So therefore, if you have any questions, you can ask them while the market is going on. Right. So wait for this one to cut. Anyway, it has not cut. Don't say it is almost at a kissing distance, so might as well buy. Don't jump the gun. You don't buy anticipating a cutting. It can jolly well turn back, right? So therefore, wait for it and then go aggressively up. Most probably it would have cut because this was updated about 4 days ago. By now it would have cut. And this long-term moving average would have flattened. It has flattened already. It's almost horizontal. It would have turned up a bit. Even if it has turned up a little, that's okay. Buy when the long-term moving average, represented by the red line here, slightly turns up, and confirmed by the green line cutting through it, like it has done somewhere here. That is the time to put all your money in it. All the money borrowed, whether stolen, borrowed, or hoarded somewhere, put all your money and you'll end up somewhere there, right? So that is a definite, this one, right? Here we go. We come to the last chart we will present. We send another chart put out by a living technical analyst, John Bollinger, who's still living, who's publishing books and papers. And this is called the Bollinger Band. There's a question just before we go there. For MACD, could you explain what compilation, long-term days and short? Yeah, that I will do when I explain the various lines individually, or various chart analysis during the course of this meeting, right? Don't worry, MACD, Bollinger Bands and everything will be explained in detail, right? That's the Bollinger Band. We have a moving average band, not as long as it's a 200 period moving average, right? but that is sandwiched between two other lines, so thin lines on top and at the bottom here. It's sandwiched, right? Market is an uptrend. How do I know it? Because we still have parabolic stop and reverse dots underneath. That's the immediate trend. So I didn't remove it from the main chart just to show that do anything while the trend is up. Don't go and play with it these ones like upsurge there. Don't go and put your money into that. Nevertheless, this is also sloping down. So this moving average is not just drawn for fun. It is useful. Look at that long-term moving average going in the middle. It has edged up here. A buy signal, two buy signals, parabolic there, and the long-term moving average edging up. And then inside that, the candlestick is also drawn. The original candlestick, not a sort of a squeezed candlestick, right? As some people preferred to draw, it is not a squeezed one. It's a normal candlestick chart. Just to show where is the present price. You see that it's going and hitting this upper line. What is that upper line? It is 2 standard deviations away from this moving average line. Right? Now, when it's 2 standard deviations away, those who have done some, elementary maths will know that anything that happens in nature or randomly in nature, their values will lie between 3 standard deviations to the left and 3 standard deviations to the right from the mean line. Now, but 2 standard deviations line is very relevant because almost 95% of the time it will remain here within the 2 standard deviations. Either 2 standard deviations down like this or 2 standard deviations up. What is the standard? What do you mean by the standard deviation? Just memorize the word RMSD. Square root of the mean squared deviation. You see deviations from the mean, square them to make the negative sign vanish. When you square 2 negative numbers, they become positive. Minus into minus is plus. Plus into plus is also plus. So therefore, no negative number. And to neutralize the fact that you have squared them, we find the square root of it. So RMSD is shortened to the code standard deviation. So standard deviation is not a magical secret calculation. It's just the square root of the mean of deviations, positive deviations and negative deviations. You get the deviations, get rid of the minus sign in the negative deviation by squaring all the deviations, and get rid of the squaring effect by finding the square root. Right, so we understand that this is plus 2D from this line, and this is minus 2D from this line. The lower line is minus 2D, and the upper line is plus 2D from this line, this black line here, the long-term moving average. And also, something to note is that it is edged up. So the long-term moving average is rising, a very bullish signal. So as far as the ASI is concerned, it happens to be true. During the past few days, it has been edging up. And it's if it continues to turn up, you'll see. And the other thing is this upper line, after hitting it, it doesn't penetrate. It's like a ceiling, right? You hit the ceiling, you hurt your head and you come down. So that happens even to individual stocks, right? Sometimes due to over enthusiasm, you go on buying and pushing it up above the second standard deviation, and you will always see that will be very, very shortly. It happens almost accidentally and then it corrects itself immediately. Very next day it will correct. So that is something that is something that you must make a note of, right? You don't sell when the RSI is high, but you sell when this Bollinger Band is hit, right? And that's where this happens. Always you see, after hitting it or slight penetration of the upper standard deviation line, you will sell and the share has come down. The following, right? Right. Now let's look in detail at all these indicators that we did. Are they creations by me or anybody? Simple arithmetic we need to understand. We need to understand charts and indicators. Any questions you have, please ask. You won't get a chance to ask at the end, when all the people will be asking questions. So ask, right. An end period simple moving average, a very simple thing. It's like this moving average reminds me of an earthworm going through its burrows, right? You have seen an earthworm progressing on the ground or during the rare occasions it comes to the surface of the ground, and you'll see that it moves in a certain way. So this moving average is moving in that similar manner, or even a snake going, progressing on the surface, right? Let's see what a moving average is. See, we take the, first three numbers. There you are in a series, just a cooked up series, say 12, 12.5 and 30. You add them together, find the average 1250. Next, you drop the first number, you add the next number, fourth number. Add them up, divide by 3, you get 30. Right? You continue that process along this. That's a smooth number series called a simple moving average. It can be 3 at a time, it can be 4 at a time, 5 at a time, 8 at a time, 13 at a time, whatever it is. Right? Right. This is to be simple as possible. I have shown you a 3-period moving average. First 3, 1250. Next 3, 30. Next 3, where is it? 13.66. Next, 13.50, and so on, it goes on. If you have the patience to go through it, you'll see that the alternating black and green double brackets show where the means are. If you take the series of these means, that will be a simple moving average series. Very easy to understand. A more complex sort of a calculation is an exponential moving average. It is based on the theory that more recent prices are more relevant than far removed prices. Prices that are far removed in a series is less relevant, whereas more recent prices are more relevant. That's a principle also in time series. Those who have studied the economic time series, you'll find that we give a higher weightage to more recent prices and lesser weightage to far removed prices. More remote the price is, it's of no relevance. See, a price that prevailed 1 month ago has less reference to price that prevailed 1 week ago. A price that prevailed 1 day ago is more relevant to price that occurred 5 days ago, right? So therefore, we are trying to give a series exponential weighting to nearby prices, where a lower emphasis to right. That's an example of an exponential moving average calculation. You see, we started with a erratic calculation of actual closing prices, and we ended up with a 5-day exponential moving average here, which is a very smooth and a more relevant prices, more closely related, right? Believing in the principle that prices are sticky, like, as if they have been glued together. Today's price is more closely related to yesterday's price than to the price 1 week ago, right? Any questions you can ask? So having understood the simple arithmetic you need, we come to indicators that are used. I told you the Fibonacci fan, relative strength index on balance volume, moving average convergence and divergence, Bollinger Bands, parabolic stop and reverse. Now, these are not the only indicators available. These are not the only indicators, right? They are not the only indicators. But I have handpicked them because they are widely used, and therefore they are widely relevant. Why? It's very popular, right? Most popular indicators are the most relevant. You read the question. Right. Some of your questions maybe available to me, and I will go through it, and before Monday you will get the answer so that you can use them for your buying or selling or whatever decision. And don't worry about it. Your questions will be stored and answered. There are quite a lot of questions coming in, I can see. MACD is calculated for all. Somebody is asking, is MACD calculated only for a particular company? No, for all the companies we calculate. Metastock makes it available to calculate any of these, right? And many more. We have handpicked these, but many more can be calculated. You can see on the screen, Fibonacci fans, relative strength index, on balance volume, moving average, convergence and divergence, Bollinger Bands and parabolic stop and reverse. They are all very commonly, indicated. But if you want any other indices, we will expand it later on. But these, the 6 things that we have highlighted are more than enough to, risk your money and, and make buying or selling decisions. More than enough. Some people look at hundreds of indicators. I have seen that in Hong Kong, but never buy anything because you see, they don't know how to interpret them properly, and then as a result, there are no purchases or salesmen. Eventually, they'll make the wrong purchase, right? So don't because they all point towards 2 things: buy or sell or hold, right? 3 things actually. So that one, you don't need hundreds of indicators. Different people do research and find different indices, but that doesn't matter. Okay. Relative strength index designed by Wells Wilder, and RSI is low, indication that there is strong selling pressure, right? RSI is, when is there strong selling pressure? When a share is not popular. Popular perception is that the share is done. So don't buy a share. Now, if you look at some of the shares that went out of our market, say Touchwood or some Vanik or something that went out of our market. If you look at their last stages, you'll see that they all had very low RSI. So just because you go and buy that, oh my God, RSI has come down to 15. That is plain stupidity. On the other hand, if you look at ACL or something, it goes right to about 80 almost and remains there. Despite some people saying when it's 80, sell. But don't sell. That's not an overbought or oversold. It's showing popular and unpopular shares. When something is popular, you buy it. Of course, there are misled people just selling it at high RSI and buying at, it's not an overbought or oversold indicator. It's a strength indicator, as the name implies, relative strength index. It shows how strong this share is. Look at the calculation. See, the index is calculated from the calculation is relative strength. Relative strength, the average price gain during the period, usually 14 trading days, the stock closed high. why 14? We have only 5 trading days in a week. Because we include forex markets. Forex markets now have, say, 5 trading days because people have grown lazier. But when I was in Hong Kong, they were 24-hour, 7 days a week market, the largest market in the world. So that is why he has chosen 14 days. You can choose 5 days, right, in your calculations. You can alter the parameters. So relative strength is the key figure here. So 100 minus 100 over 1 plus RS is the RSI. Right? 100 minus 100 plus 100 over 1 plus RS, or the relative strength. And the relative strength is the average gain during the past period during which the stock closed high, and the average price loss due. It has no indication of, overboughtness or oversold. Where did we see the overboughtness and oversoldness? In the Bollinger Bands. What you have to look in the Bollinger Bands, you look in the RSI. That's where you go wrong. Popular stocks, which have been bought, you sell by looking at the wrong thing. You assess a person looking at the back of his head, not the face, right? So that is the mistake you are making, right? Moving average, convergence, and divergence. There are 2 moving average, one short term, say usually 20 period, and another long term, say 200 period. When the short term moving average, usually the long term one is a EMA, exponential moving average. And the shorter term one is a simple moving average. And when that one cuts, the shorter term, or the fast, we call it the fast moving average, and the slow moving average. The longer term one is called the slow moving average because they vary slowly. You'll see that it's a bicycle. If it cuts from below, it comes from below and cuts it and moves above the long-term moving average. So the moving average MACD consists of 2 lines. Long-term moving average line overlapped with a short-term moving average. Short-term moving average line cuts from below and moves to the top by. So that's what type of indicator is that? That's the immediate buying or selling prompt, right? Okay, that's the immediate buying or. You have already seen one, which is the parabolic stop and reverse, PSAR, those dots. You see dots underneath, and you take a decision on that. If the opposite happens, sell. That is, a short-term moving average cuts the long-term moving average from above and moves down. Sell. Don't ask anybody. Don't go to your astrology and ask, is it good to sell or is it good to buy? Is it good time to sell or good time to buy? This is your astrology, right? And this gives you all that you need to know. You don't have to go and, feel your way in the dark. You have here the tools coming to you daily on your computer at home, right? On balance volume. 1976 by Joseph Granville. If the magnitude not of much significance, this is a very easy. This is for any illiterate person who doesn't like to calculate, who hate numbers, right? Who got punished every day for arithmetic at school. So this is just look at that line. Line is either horizontal, that is flat, or moving up, you can get ready to buy. If it goes above 45 degrees, aggressively buy, right? No harm buying it when it's edged up, because edging up shows that there's a high degree of buying. And it shows how many days the share moved up when the buying was high. So we have indication of there are many people, most of them illiterate. We think that people in European countries are more literate than us. They are not. But so many of them look only at this on balance, volume, and trade. They admit that. It's easy to understand. OBV is turned up, buy. Close your eyes and buy. Other way happens, it goes leaning down below the horizontal line, sell. Such an easy one. People who don't like numbers, look at the direction of that. Created by John Bollinger, you have the Bollinger chart. Consists of long-term exponential moving average, 200 period. There are two standard deviations. I have already mentioned that when I was showing it on the chart. You see that the candlestick chart is also plotted on the same graph, just to show, because this is Bollinger Band is not only a buying prompt or a selling prompt, but also an overbought indicator. When it goes and hits the upper two standard deviations limit, you are advised to sell, to bring it down. And moreover, when it hits the lower standard, two standard deviations, you have to find a chance to buy it, because it's likely to move up, at least up to the middle, right? Unless there is an inherent weakness in the stock, right? Inherent weakness means something going wrong in the stock. Okay? Right. Parabolic stop and reverse. It's very easy to understand, right? Unless you are totally blind, you can't see the dots. Parabolic dots are pretty obvious. See the parabolic dots under the price bars, buy. They move on to the top of the candlestick, sell. There's no other words. There are no two words to it. You either buy or you sell. There is no holding in this. So it's people who like that type of advice. Tell me either buy or sell. I had a broker working under me at in Hong Kong who came very first day. He asked me what to buy. So I told him a thing to buy, and he said, buy or sell. It doesn't matter. What he wanted was commission. So he said, tell me something that I can buy or sell. So that type of a person. PSAR is the ideal thing, right? It tells you whether to buy or to sell. That is it. Making life very simple. A stock, after reaching a recent high, that's the Fibonacci retracements. A stock after reaching a recent high and a recent low may start retracing by amounts corresponding to the Fibonacci number series. The Fibonacci numbers, as you go down, as I told you before, are magic numbers. You have two eyes, right? One nose. The 1, 2 are Fibonacci numbers, right? If you look at, if you are a medical person or if you have done human biology, or you will see that our bones are in numbers of 5s and 3s and 8s and so on, right? So this Fibonacci number is a number created by, if there is a creator, is very much in vogue by the creator. If we evolved, you believe in evolution and not on creation. Evolution also, favored Fibonacci numbers. And if you look at the stars, star patterns, even a simple thing like a snail shell, and you'll see the Fibonacci ratios. That's the ratio between Fibonacci numbers, always present. So it's a natural phenomenon. And since the markets are manned by people who, use their, gut feeling to buy or sell, will always go by Fibonacci numbers. That's 100% sure. Whatever somebody tells them, they'll ultimately, their work will be prompted. Their actions will be prompted by Fibonacci ratios. Right? Fibonacci was Bonacci's son. Fibonacci means Bonacci's son. His actual name was Leonardo of Pisa, right? But all of them called him Fibonacci. Now, these things have not been created by Fibonacci in the sense. Fibonacci learned it from right. I'm coming to the example. Before I come to that, that's a PSAR of LOLC, right? Which is the largest stock. You see that it is showing a OBV up. The blue line, we are conventional using the blue line for that. It's almost vertical. PSAR is below, right? And so the RSI they have plotted, I suppose, is high. Naturally, if people are buying, they'll get the RSI up. Right? So a stock like this, you don't have to ask hundreds of questions. PSAR is up, OBV is up, close your eyes, buy it. Right there. Do you see it being sold? No, this is say far away from that candlestick. Right? For this PSAR to go above that, it will take a very long time. Right? So that's a stock you can hold in your portfolio for the long term, right? And if you look at the fundamental facts behind it, you see that they have a big say in the up and coming port city project. So naturally, they'll be one of the biggest beneficiaries. So naturally, people have perceived that and are moving the market up, right? And they have, I know if you know the fundamental, they have reported the huge profit. So a record profit, right? And here we are. Uh, a broader look at LOC with the MACD, and the MACD is also up. You can see the green line cutting the red line. So really speaking, this has to edge up a little, and there will be aggressive buying. When it moves up, this will also move a little edging up of the long-term moving average. But nevertheless, the short term has cut the long term. Definite buy signal. Look at the Bollinger Bands. Bollinger Bands. And what does that mean? See, it has shot up above the second standard deviation. So in the short term, whatever others say, there can be a sort of a slowing down in moving up, because they have gone way above the second, the upper standard deviation, right? It has gone there, way up above. That is what is meant by overbought, right? Not RSI going to 80 or 90. There are so many where the RSI can easily go to 90, 96, right? But this is a definite indicator that we have been over enthusiastic and we have jumped the gun. We should have gone below this line, because the line has edged up. You can take it below the line very easily and gradually take it up. So say maybe the next day you will see a slight correction before it moves up. So don't worry if that happens. It's only a temporary, because all the others are indicating strong buy signals. The Fibonacci retracement. It has gone to the 30% there, and it has huge potential to go back up to the 100%. So it has the upward space is lot, only as long as it goes slowly, right? It can't jump up like that. See the yesterday's day open was way above the previous day's day close, right? That creates a gap there. Not that it will come down and fill it, but it will edge a little sideways and then go up. It has to go up and maintain the continuity. Right. That's Expo Lanka. Right. In Expo Lanka, OBV is turned up. Right. Bullish signal. right? Volumes are going up, on days the share is going up. Again, you'll see that jump of expo, right? People in our market, either they are over enthusiastic or something like that. So anyway, still the RSI is low and plenty of potential for it to go up. It's not as bad as any other stock, but it has potential, but you have to be patient. Look at the MACD. MACD is down, right? MACD has a long way to go. That is why that sluggishness. It's true, it has a long way to go, but this type of jump you will see in the Bollinger Bands. I think you have the Bollinger Bands there. The jump is a jump from the below the long-term moving average to the long term, above the long-term moving average, but not above. So you will not see a retracement in expo. You will, though there was a jump, there was a small exhaustion gap created here. You might see that expo might move up in the near term, right? Parabolics are down, below it, and longer term moving average has slight bend upwards. It's bending upwards a bit. And the upper standard deviation line, which is low, is showing signs of widening. So next trading day also, you'll see a surge in Sri Lanka. Right. Fibonacci lines for Expo shows that it has plenty of space to go up. It is way below the 30%, right? And therefore it has plenty of space up there, just here. So from here to here, or to 100% movement, there is a huge space left. Okay, it might jolly well do a W. When RSI is high, somebody has asked, can we assume the market is upward trend? Yes, RSI high means the stock is strong. So that it's an definite indication of a strong stock. RSI is calculated relative to what? It's relative to the relative strength, right? Which have been relative. It says that how strong is the stock, right? Just because a stock is strong, that is no reason to sell it. It's a reason to buy it, right? What is the time duration to set for short-term moving average? About, say, in Sri Lankan terms, we have only 5 trading days. So, say 15 to 20 trading days is ideal. Okay? If you are talking about 1 day candlesticks, 15 to 20 candlesticks will be a short term, right? And a long term will be near 200 days. Okay, so long term trend, you can even bring it to 100 days, but a 200-day moving average is a more reliable parameter. I'm answering the questions really. This is Bill. You see that parabolic has just edged up a bit. Sorry, the OBV. Parabolic stop and reverse is still showing downward momentum. So it has to go up a bit. It's not strongly going up. That's why the OBV is here, edged slightly up. Right? It has to move up like that. See? Like that. That means without asking anybody, you just go and buy such a stock when the OBV turns like that. Right? Then RSI is very low. Right? I think this is the RSI scale on this side. Just a neutral RSI. Upwardly rising relative strength, but not strong enough. That is why it has failed to go and break the, since of late, Bill is slightly bogged down to a very narrow, low range. Perhaps they are awaiting news because they are the immediate beneficiary from any progress in the development of the new Port City project, which is the flagship of this company. And therefore, this is something good to hold in the long term. Right. Yeah, that's the MACD has come down in the case of Bill naturally because of the big slump in prices, and therefore it has to make a big move up to get this green line up. Okay, so there must be, you saw since of late there was not much buying interest. What is the reason? I don't know. In Sri Lanka, people want quick profits, but they have been burned by stocks for where they had to wait for long. And because of that, they have got a little impatient. They had better things to do with their money, so they pulled money out of Bill and put it elsewhere, except for people who had information of its prospects, right? Bollinger Band shows there it's moving on a flat long-term moving average. Smack on the middle of the long-term moving average, nowhere near the potential. It has great potential to go up here. Plenty of space left. Right? Any concerted buying can send it to the sevens. Sevens and heavens, right? And if that happens, you'll see the parabolic starting somewhere here. It has moved up to midway on the recent highs, and but not to its potential. People have lost their patience. See how they have sold that, right? Over there, they have lost their patience, and with bill, they had better stocks to move their money to, so they temporarily moved their stocks. Right. That I already mentioned. This is Royal Ceramics. Royal Ceramics, hardly any movement. Parabolic says buy. RSI says buy, right? OBV says buy. So, but nevertheless, people are not buying it aggressively now. There are some cases like that. There's no reason for anybody to sell it. It has good markets, good potential, but people are not buying it aggressively now. Though it has plenty of scope for it to go up. Look at the other graphs of ceramics. You'll see that MACD is edging up. Compare this height with this. It's edging up. Short-term moving average has moved up above the long-term trend. Trend line is also edging up. So all in all, the share is, superb, but unfortunate. Nobody is buying. Right? That's the most you can say about Royal Ceramics. So there, I think in our market, too fewer people getting into the market, so that if you have a large market crowd, we have a 20 million population, out of which at least 10 million should be trading. But unfortunately, many people still are passive investors, putting their money into fixed deposits because fixed deposits are still paying them something. Markets must show their colors and get them into the markets. Right. It's a grossly under participated market. Bollinger Band also is here. This one bent down, see? And this one has enough empty space up there. Why is not going up? That is anybody's question. No reason for it to not go up. It has every space available for it to go up. Yeah, it has been going up for a while and they stagnated. People showed disappointment somewhere. Otherwise, this move would have gone up and then way above. Maybe we don't have something like a Wall Street Journal in Sri Lanka to inform people, except the broker provided information. There is no independent press aggressively analyzing markets. So that people get news that they can trust. So there is a gross underperformance. There's a question asked, what are the most important indicators for investment rather than for trading? That I mentioned last time. For that, you have to look at way beyond the markets. I told you about Harry Markowitz, the 1980s economics Nobel Prize winner. Have a diversified portfolio. Look at the main investors in the market, main movers in the market, or the main big people in the market who own groups of shares, right? And see their political prospects. Are they in the right camp? Are they providing right type of guidance to their companies? Have they been successful in the past? Right? Put more money in those stocks. Those who have not been successful. Now you see, we have a fairly aging population. We have a lot of old people, despite COVID and all that. Still, we have a fairly good senior members like us. Now, they like these dividend-paying stocks. So certain people, as a rule, pay dividends. Others, as a rule, don't pay dividends. So portfolio building people want some, they are not buy-sell people. They don't buy and sell for current profits. They have a long-term perspective, slow capital growth, and a fairly decent income, right? If any ruler thinks of developing the country, you must bring the interest rates down to lower single digits in the country. No country has progressed. You look at any economy in the world, no economy has progressed with a high interest rate regime. No, none. You must have well below 5% interest rates so that people don't try to earn passive investments, putting money in fixed deposits or whatever that kind of investment, right? Mutual funds, or that's one problem with the market. That is one. And in the absence of, as I mentioned, the Markowitz theory, have a diversified investment. We can't diversify in any other country. You have ETFs, exchange traded funds. But here we don't have. We don't have, say, I want to buy the ASI. How can I buy the ASI? I have to buy hundreds of stocks in the ASI, in the proportion they occur in the ASI. There is no ASI stock ETF, right? Like the DAX, Spider, or the SP index. So unfortunately, you don't. Then the other problem is that we don't have foreigners coming in. Why? In groups. The foreigners, first thing they will ask, do you have risk management? We have none. We don't have options. We don't have futures. We don't have short selling. So how in a market there are ups and downs? You can earn from an up, but you can't earn from a down because nobody looked at it, right? And this is a one-way market. You buy low and sell high. Again, you have to wait till it comes low and buy high. Buy till it goes high and sell. So that type of a oscillating market, that vicious, cycle must be broken. So that is the problem with the market. So you have a long term, you ask, is just buy as many shares as possible in a wide variety of companies owned by wide variety of people, or rather the business leaders. Well, this is Haley's MGT, the fabrics company, the fabric producer, excellent OBV. People are buying. Rising RSI, parabolic showing buy, right? Whatever that you show on this chart for MGT is buy, right? And naturally, it's providing fabrics turned out locally. And garment industry is one of the cash cows in our country. Again, back to MGT, you see a superb crossover. The MACD edging up, slow moving average, or the MACD line moving up. So there's nothing negative about it. Nothing ever. For a long time, except for that minute period here. Everything has been positive with Harris MGT. There's a question. In RCL, STMA is cutting from top, which is a sell signal. While all others are buy, is it a weakness of it's a short-term weakness, I would say, right? You can't say that it's not a weakness. It is a weakness. There's no reason for. Royal Ceramics into tile industry, and they are fast moving from buying and selling, or importing and selling, to manufacturing and selling. So no, it's not a weakness of indicators. It's a weakness of either the perception of the market. Not enough news is available. That's why I said we don't have a Wall Street Journal that covers all share index stocks in an unbiased manner. You have newspaper companies with long histories, but none of them are giving good reviews independently of to become something like the Wall Street Journal, Forbes magazine, or the like in Sri Lanka, right? The thing will have to come when market grows in stature. So Aries fabric, all in all, has nothing negative here. Even the Bollinger Band shows underperformance, plenty of potential to go up. The central moving average turned up very well. It's just no knowledge about it. For many people, MGT is just another stock. They don't know what they do. Aries fabric retracement is nearing the near-term high. Is way above the 61%, 61.8% Fibonacci. And even it has an exhaustion gap here and it's moving up as if people have woken up suddenly and realized there's a stuff called FGT. And mainly our problem is nothing but misinformation. Not enough information in the market, people not being aware. The last time some people asked whether we can do that in Sinhalese in this program. For the general public, we can do that in Sinhalese or rather Singlish, because many of the technical terms in technical analysis, I don't know whether we'll be able to translate all of them. I don't say that our language is not strong enough to translate anything into Sinhalese, but it will become a huge word which people don't understand. But nevertheless, explanations can be given in Sinhalese, right? Can you please explain a combination of indicators to find out the probable entry and exit points for swing trade? Right. Buy and sell, these indicators I have shown, you can use it for long-term investments as well as swing trading on swings. Only thing is, you will have to ask our analyst to switch to short, like 1 minute charts and tell you the indication on the 1 minute chart. And then you buy or sell. Well, and if you want to do this swing trading, the best thing is for you to invest in a Metastock subscription and be because you can't do swing trading like an investment. If you build portfolios, yeah, you even daily charts are quite enough. But if you want to do swing trading, you ought to have you better do that on a Metastock real-time subscription. And if you are a successful trader, you'll be able to recover the cost of your subscription. That's not difficult. Right. All right. We have Lanka volatiles. Next, OBV is up, parabolic says buy, and RSI is neutral, right? So it's all in all, that's buy. Let's look at the Bollinger and you see the MACD. MACD is up, way up, right? It's buy all the way. And Bollinger Band, my God, it has gone and hit the upper standard deviation, moving it way above. It is super bullish, almost overbought, right? So that's what I would call a super share, right? It has come back up to the all-time high, right? And so that's a fairly big climb from the time market was at 9,000 level. It has already come. So it has sort of become a front runner for the market. Right. So somebody who wanted to know, somebody is asking what is Metastock. Metastock was started when the internet started by Steve Arkelis, and he sold that to Reuters, Metastock. Reuters floated a subsidiary by the name of Equis. So it became Equis company, Metastock. That subsidiary is still there, so you can buy it from Equis. And it's not because of the high subscription or subscriptions all over the world, because they cover stocks, forex, commodities, futures, options all over the world. As such, they have a huge client base. Right.
How do you order it?
Right. So if you go to Reuters Metastock, go to the they will and ask how do I purchase Metastock. They'll tell you how to purchase a subscription. Right. It's not highly priced because of the heavy subscription rate all over the world, and the large number of people subscribing, and therefore it's affordable. The benefits far outweigh the costs. That is the truth. I'm not promoting it. I don't get anything from that, but I'm telling you, but it's a worthwhile subscription. Like buying 2 monitors for your desktop computer, and then having a wider view of your market, and then stop all other work and start investing. Sri Lankan market is a good market to invest, and if you have resources outside, it's a good market to invest in resources outside. If you are having money that you can't disclose, you can use that to convert it into digital dollars, and then convert it into whatever cryptocurrency you want and trade. Okay. What does short-term moving average line reduce? Why does okay? It doesn't reduce. When the stocks go up, short-term moving average will add to it anyway. It doesn't come down. It comes down because after short-term moving average goes up, people start selling to take profits, and that brings market down. Some people have a short-term time horizon for their trades, so they buy for the short-term in and short-term out. People, their policy is short-term. They don't have the patience to, maybe they don't have the time to do that, or the patience, or they are under pressure to sell it within the day, right? So they become day traders. So these day traders keep on selling. Next day they keep on buying. That results in swing trades. Okay, any more questions you have? Any questions you have before we wind up for the day? We have time. You can ask questions if you have.
Yeah, we close. We can close.
Right?
Okay.
So thank you very much. And we hope you learn something and you will, in the course of, the near future, you'll, learn more, get into all the websites and necessary, and some of you might even acquire some website where you can get the prices then and there if you have the spare time. Say maybe you are retired or you are a full-time investor, then you can jolly well buy meta stock, though other things are available free of charge. In Sinhalese, there's a saying that there's a hole in the thing that is cheap or free. So therefore, don't go for them. Don't go for this Investopedia and all sorts of things. Go for a good, reputed, Thomson Reuters is a reputed company. They won't touch anything which is not as good as Bloomberg. So, because they have a close competition from Bloomberg. In other countries, you have Bloomberg as well. So therefore, you invest in that and, you can trade aggressive. You can live on that. You can build your wealth. Okay. Thank you very much. And we'll see you in few months' time. Say. Huh?
2 weeks time.
Oh, 2 weeks' time. So Yan says 2 weeks' time. Okay. Hope the lockdown will last, and because I'm stuck here in Colombo and I've seen my house for several weeks now. Okay.
If there are no further questions, I would now like to close the webinar. If you do not get our research reports, please send a WhatsApp to 0777-233-633 number. On behalf of Capital Trust Research Private Limited, we wish to extend a sincere thank you to Mr. Rajapakse for imparting his knowledge on authentic technical analysis in a series of lectures. We also thank our technical analysts, Udana Valivitigoda and Jinendra Jayatunga, and our staff for organizing this webinar. Last but not least, our valued clients for their participation with short notice, which we greatly appreciate. Hope to see you soon at our next webinar. Have a nice day.